Hi, my name's Corryn Wild and I'm an independent financial advisor for 3 counties. I'm going to talk you through some of the changes which have recently been announced with regards to the health and social care plan. Currently, anybody who has assets of more than £14,250 may be required to contribute towards the costs of their care. Anybody who has assets of more than £23,250 could be required to pay for the costs of their care in full to the extent that they continue to have assets over that threshold. These figures are going to change, and from October 2023, if you have assets of £20,000 or less, you will not be required to contribute towards the costs of your care. If you have assets between £20,000 and £100,000, you may be required to contribute to an extent. So your contribution will be means tested and it will be on a sliding scale in line with the level of your assets between these two figures of £20,000 and £100,000. If you have assets over £100,000, you will be asked to pay for the cost of your care if necessary. And this is no change from the way things are currently, whereby if you had assets of more than £100,000, you would be fully funding the costs of your care. Any income that you receive is treated separately. So irrespective of the level of assets you have, the income that you receive may be used to cover the cost of your care. Naturally, some care costs are met by the NHS, and this is likely to continue to be the case even after the changes have been made. There's also going to be a cap imposed on the total amount that someone could be expected to pay towards the cost of their care over their lifetime. This cap is going to be £86,000, which is broadly equivalent to the costs of care over 3 years. However, it should be noted that this relates specifically to the costs of care and does not necessarily mean that it will cover some of the living costs that individuals in residential care may face. For example, the costs of their accommodation and the cost of their food. So it could be that somebody reaches the cap of £86,000 but still has costs to pay for personally because they're not directly related to their care but more related to their accommodation or food costs. In particular, this might be the case if they've paid for a higher standard of accommodation. In terms of changes that are going to be made to help fund the NHS and also social care in the UK, there are going to be some increases from a tax perspective. Firstly, to national insurance. From April 2022, there will be a 1.25% increase in national insurance contributions. This will apply specifically to those workers who pay national insurance who are under state pension age. However, there will also be from April 2023 a levy in the form of national insurance tax on those workers who are over state pension age. So for example, if someone is still working in their 70s, they would be required to pay this 1.25%, whereas the standard national insurance does stop when we reach state pension age. This extra 1.25% that will be required even beyond state pension age is going to be referred to as a health and social care levy. So slightly different to the standard national insurance, but still a form of taxation which will bring in revenue for the NHS and social care nonetheless. The other form of revenue which is going to be brought in will be an increase to dividend tax. So this is income tax, which is payable on dividends received. So currently, the rates of tax for dividends are 7.5% for basic rate taxpayers, 32.5% for higher rate taxpayers, and 38.1% for additional taxpayers. All of these rates will have 1.25% added to them. So for example, as a basic rate taxpayer, that would mean that instead of paying 7.5%, you'd be paying 8.75% on dividends. So in terms of ways of bringing in revenue to pay for the shortfall in funding in the NHS and social care, we have an increase in national insurance. This is for employers as well as employees. We have a levy, which is a form of national insurance for workers over the state pension age as well. We also then have dividend tax, income tax payable on dividends, which is set to increase by 1.25% also.